All right, important flash on our screens right now coming in from Yes Bank. Board to consider the proposal of appointment of independent directors on 13th of December and board to recommend name of new chairman for RBI approval on 13th of December. So 13th of December is going to be an important day for Yes Bank and for the entire management and the board reshuffle that we are going to see. And the stock is down 6%. In fact, this particular news has only perked up the stock a little bit in the last few minutes. And board to consider the proposal of appointment of independent directors as well as the new chairman for RBI approval on December 13th. So actually going in line with the set target in terms of the timeline. That is the biggest thing that is coming on in terms of timeline. It is on track. It is as early as 13th of December. The names are looking clearer. It's going in for an RBI approval. That's giving some solace to that particular counter as well. But nonetheless, the stock has been beaten down over 6% at this point. So that's an important story we'll keep a track on. But let's also focus on the other headlines of
we now know the date, and after Ashok Chawla's resignation, I guess it was just due course of action that you had to sort of come out with an announcement on when the...
It's pacificatory. It's giving the direction after so much has happened, a storm which has occurred when it came to so many resignations as well. So it is pacificatory in terms of giving a timeline.
Yeah, so we know the date for now. So at least there's some clarity on what the next, course of action is going to be.
And those names will be very important to know.
All right, let's take a look at how the markets are doing. Today actually has been a good day for the markets so far. Up almost about 0.5%. It's only the mid caps that are a tad bit under pressure, so down about 0.4%. But the headline index has been holding up very well. If you pull up the contribution plate, you'll realize that the heavy lifting today is being done only by the IT stocks. So 25 points almost coming from Infosys today, and about 20 points coming in from TCS today. So put together, the almost 40 points of a move is coming purely from the IT names. Of course, HDFC Bank, Reliance Industries also playing its part in the up move that we're seeing on the index. All in all, 3 days running now, the market has been doing quite well, holding closer to that 200-day moving average. It's been a bit of a sticky spot for the market. Let's see if it gets taken out. But we're also looking at global markets today. Asia has seen some modest gains as investors are focusing on the crucial upcoming G20 summit later in the week. In fact, not modest anymore. Look at that, 1.5% on Hong Kong, 1% in excess of that on Shanghai. Additionally, uncertainty around the US-China trade war has also dampened sentiment. Meanwhile, the futures indicate a positive start for the European markets, with the focus being on developments on Brexit and Italy's budget plans as well.
All right, race for Jet Airways heats up, and CNBC TV 18 learns that after months of trying to recapitalize the beleaguered Jet Airways, its promoter Naresh Goyal has finally agreed to sell a controlling stake in Jet Airways, even as three-way talks really continue with Tata Group, Etihad and a consortium of KLM, Air France as well as Delta. And Kritika Saxena gets us the story.
Well, when Jet Airways promoters started looking out and talking to prospective investors, they were very clear that they wanted a minority equity investor to come on board and infuse capital into the company. However, after talks with several investors, including private equity investors and strategic investors, it's very clear that at this point in time, a strategic investor would not want to come on board unless and until Naresh Goyal lets go of control and gives up a controlling stake. So we understand now that Naresh Goyal has clearly communicated that yes, he is now finally willing to let go of a controlling stake in Jet Airways. We do understand that he has met with the three investors that they are talking to at this point in time, which includes Tata Group, Etihad and a consortium of Air France, KLM and Delta. This is what we have been reporting. Now, he has communicated to them via bankers and via independent meetings that he is now interested in taking talks forward. So yes, all are now entering the next stage of discussions, and he has said that he would like to retain a minority stake. So that would be below 5% is what he has indicated. He would like to continue in the company via a board seat, via perhaps a chairman emeritus kind of a position. Again, that will depend upon the conversation and how they go forward. But he has very clearly indicated that $1 billion is the infusion that is required into the company, and he wants to do what is best for the firm at this point in time. And yes, giving up control is one of the things that he might have to do, and he's willing to do now.
Okay, big moves on Jet Airways. But Ritika, what is the position of the three potential investors at this point? Why don't you take us through what's on the table for Jet?
Well, as we said, investors are now going to reach the next stage of discussion, which will include talking about the valuation and going into the details of the contours of the deal. So as far as the conversation with Tata Group goes, we understand that Tatas are looking, and we had reported this earlier, to take over a controlling stake and eventually merge Vistara with Jet Airways. Earlier, they were actively talking to Jet Airways to take out Etihad stake as well, but they're open to Etihad continuing as a minority investor. They're also open to Naresh Goyal continuing as a minority investor and open to taking over the debt of the company. They're also talking to Jet Airways for a possible infusion into jet privilege as well, but that's going to be a part of the deal. Now, the Etihad offer is different. Since Etihad is a investor at this point in time with 24% stake, they want to now buy out portion of Naresh Goyal's stake and infuse fresh capital. And as a result of that, they want to hike their stake from 24% to 49% if the deal goes through. Air France, KLM and Delta are investing or are talking to them for a possible investment as a consortium. The talks with Air France, KLM and Delta don't seem to be as serious because there's just been 2 rounds of discussions so far. They haven't really gone into the nitty-gritties, but so far they have indicated that they want Goyal as well as Etihad stake in Jet Airways. But it will of course depend on how and what they communicate in the next stage of discussion.
All right. Thanks so much, Kritika, for all those details. Another deal in the making then, as a future retail Amazon deal really inches closer. Sources tell CNBC TV 18 that final stage negotiations with respect to the valuations are underway, and the deal could be valued at around 3,500 crore rupees if Amazon really pays a call premium to allow it to buy a larger stake in future retail at a later date. Priya Shade gets us all the details. Priya, tell us, what are your sources telling you on this?
Well, absolutely. The Amazon future retail deal has entered its last lap. Now, we understand that Amazon has agreed to buy up to about 9.5% stake as far as future retail is concerned. But at this point in time, Amazon is eyeing options to increase its stake at a later date in the medium to long term is what we pick up. But of course, according to the share purchase agreement, this can happen only if Amazon exerts a call option at a later date. And for this, Amazon may have to pay a call premium, which is 20 to 25% higher than the preferential allotment formula set by SEBI. So this means that the deal could be valued at about 3,200 to 3,500 crore rupees. That is, if Amazon agrees to put the clause of a call option as a part of the share purchase agreement. This is something that we'll have to wait and watch out for. Right now, it is still being fine-tuned. Negotiations and documentation is underway, but we understand that the deal is likely to be signed in December. So that's a space that we will continue to watch out. But once the deal is closed, we'll still have to wait for a CCI approval and a shareholders approval to come in for the deal to go through. In fact, we did reach out to the companies concerned, and Future Retail did not respond to our query. Amazon said that they did not have any comments to offer as far as the query is concerned.
Okay, thanks a lot. It's going to be a very exciting deal, right? I mean, the retail space. Amazon already has a stake in Shoppers Stop, a stake in More, and now they're looking to increase their brick and mortar presence by getting into Future Group as well. I'm personally a big fan of Amazon, at least the online Amazon India website. So let's see what exciting things they do in the brick and mortar space. But thanks so much for that. Let's get back to the markets. Rhythm Desai of Morgan Stanley, we spoke to him earlier in the day. He says India is heading into the start of the new earnings cycle in 2019, but there could be some volatility because of the general elections. Listen in.
Growth in India is picking up. We have seen that for now several quarters. Revenue growth is putting successive highs. We are at a 4-year high on revenue growth for the quarter that just ended. And I think revenue growth is accelerating further in this quarter. But I think now we have come to that moment where the headline earnings growth for the Nifty or the Sensex, I think will really show some robust numbers, led largely by domestic companies and corporate banks. So we should be ready for some really solid earnings growth in the coming quarters. It's clearly going to be a source of volatility. Had they not been around, then I think we would have had probably a very strong 2019. But given that we're going to have elections, I think what investors should expect is a fair bit of volatility, depending on how the electorate decides to vote in the next government. The key risk for the market is that we get a minority government, and then I think the market gives up some of its gains. A minority government is not necessarily a risk to the economy, but does present risk to stock prices.
It is a sunny afternoon on Dalal Street. In fact, the Sensex is now up almost 300 points. Look at it go. And it's primarily heavyweights like Infosys, TCS, HDFC Bank, Reliance Industries that are out this afternoon. So the going has been pretty good, and the bulls have definitely wrestled control from the bears. But Yes Bank is a different story. It continues to slide. The stock is down 7% now. Moody's downgraded the rating of Yes Bank. They changed the outlook to negative. We also understand that the promoters have drawn up a reconciliation plan. Ritu Singh is here with more details on that. Ritu, looks like whatever news flow comes out, the stock just continues to tank.
Well, absolutely. And there have been various attempts from the management side, to calm the nerve of the investors, reiterating that, yes, there will be a search and selection committee meeting on the 12th. They will shortlist a candidate on the 13th. The board will approve it, and they'll also appoint independent directors. But clearly, that is not doing much to the stock. This also comes on the back of a Moody's downgrade, and there was no news or development, but Moody's has downgraded the stock and changed its outlook to negative on the back of all of the recent developments surrounding the spate of resignations from the board, combined with RBI's directive cutting short Rana Kapoor's tenure, all of which Moody says has raised concerns on the corporate governance at the bank. Also, what is negative is the 2 consecutive years of divergence reporting. But of course, the third year's audit is not really complete. And if that comes in again for Yes Bank, which we're expecting in the month of February or March, that will again be seen as a credit negative by Moody's, according to its statement. What it says really is concerning is that all of these developments could hamper the bank's ability to raise further capital to grow, and that could potentially be seen as a negative for Moody's, which is why it says, if Yes Bank is able to maintain its credit ratios, that will make it change the rating back to stable. But yes, the positive news has come in on the reconciliation front between the 2 warring promoters. But do remember, this is just a draft proposal that has come in from Rana Kapoor, and Madhu Kapoor and her camp will be studying it to see if they're agreeable to the terms. There are 9 points, including one where both of the promoters together can appoint 3 directors, 1 each by both the promoters, and 1 jointly nominated who will not be liable for retiring. Also, this will be a non-executive, non-independent member. Of course, there is a caveat where Rana Kapoor says if his own appointment, either as MD, CEO or chairman or on the board, is approved by the RBI or the shareholders, that will supersede the appointment of this independent director. Further, he says, 3 whole-time directors can also be appointed. And most importantly, if all of these terms are agreed upon, Rana Kapoor will drop his plea challenging the Bombay High Court order, which gave Madhu Kapoor the right to nominate directors on the board of the bank.
All right, so that's a big developing story, and that reconciliation really has to really go on and has a strict deadline to it. But Ritu also talked to us about the big IBC case, which has really headed to NCLT in Ahmedabad today, and that hearing on debt-laden Essar Steel has really begun today. So what transpired today at the hearing, and when is the next hearing?
Well, the hearing is underway, but the resolution still seems far away. The Committee of Creditors and the resolution professional again argued today that the petition of the promoters challenging ArcelorMittal's offer and seeking to withdraw insolvency proceedings, that should be dismissed because that offer has not been considered by the Committee of Creditors. They say that the Ruya's offer to repay 54,000 crore rupees to withdraw the company from insolvency is not maintainable for several reasons, and that ArcelorMittal has already been chosen as the highest bidder, and that is something that the court should go with. Separately, Essar Steel promoters have argued that lenders should really look at maximizing revenue, and therefore their offer stands better than what ArcelorMittal has offered at about 42,000 crore rupees. But the hearing for now has been adjourned because the bench was not at full strength, and it will continue now next on the 10th of December.
Okay, well, thanks a lot for those updates, Ritu. Moving on, the sharp fall in Lodha's dollar bond prices raised concerns of a low liquidity condition in the market. But in a CNBC TV 18 exclusive, Abhishek Lodha, the MD and CEO of the group, clarified that the bond in question is just a $325 million thinly traded one. He also confirmed reports of an asset sale in London, proceeds of which will be used to pay down his debt. Take a look.
This is a modest size $325 million USD bond issued in 2015, maturing in 2020. This is not listed on any exchange. It's an OTC bond and has very small volumes. For example, the volume in the last 3 months is less than $5 million. If you look at a pricing of 89 or 90, what does it tell you? Does it say default? Because default bonds don't trade at 89, 90. Default bonds trade at 20, 30, 50. So it just is a situation of a very illiquid instrument. Lodha Developers, which is the development company that we have in India, is selling its equity interest in the London properties and will receive about 4,200 odd crores depending on the exchange rate for that sale. And this is driven by a strategic decision by our board, where we have decided that we need to move to a much higher level of ratings. We want to move into the AA family over the next 12 months. And as a part of that process, we are looking at significant delevering because we have such significant assets which can easily be delevered. The IPO, as you're aware, currently the Indian markets are not conducive, not just us. There has been no IPO which has realistically happened in the last few months. We expect that there will be a window to do the IPO either before the general elections or after the general elections.
All right, so those were clarifications really coming in from Abhishek Lodha of Lodha Group. And in fact, take a look at Piramal Enterprises stock. And that has really, started to recover today after the massive fall that it had seen yesterday because of its exposure to this particular real estate company. Let's focus on another counter then. Arvind, that one trades ex-demerger at listing price of 110 rupees per share. And the stock is under pressure as investors are more bullish on branded retail business. Let's get a Nigel to share the details and what it really means. Nigel.
Well, that's right. Just to clarify to our viewers that if you buy the stock today, then you're not going to be entitled to the demerged entity. That's the other two businesses, the branding business as well as the engineering business. Because effectively, if you bought it till yesterday, then you'll be receiving shares of both these other two businesses in January 2019 when both those two businesses will list. Today, the segment that is trading is the textile business. That's the erstwhile business of the company. Now, it listed at around 110 rupees. And if you're looking at the valuations, well, if you're looking at the FY20 EBITDA, most of the street are estimating a number of roughly around 900 crores odd. So it lists at around 110 rupees, means it lists at an EV upon EBITDA of roughly around 5.7. I'll tell you why. Because if you're assuming 900 crores and 5.7 multiple on an EV upon EBITDA basis, you need to also deduct a debt of around 2,300 crores from the enterprise value. Then you get a market cap of around 3,000 crores, and that's precisely where the stock is trading today. Equirus, they say they have a target price of around 144 rupees on the share. Remember, they're also factoring in some kind of near-term pressure because most of the investors, they were quite bullish on the branding retail business. So those shares will come only later. So they may not want to hold these shares. Further, Equirus, they are saying that in fact they are estimating a revenue growth for the next few years of around 9%. In the last few years, it was only around 6%. They're citing a whole host of factors like expansion as well as weaker currency to help them out in their exports. Back to you.
Okay, thanks a lot for that.
Straight to the election coverage, and after weeks of rigorous campaigning, polling is underway in the state of Madhya Pradesh. Now, voting is being held to the 230 seats in Madhya Pradesh Assembly, where the main contest is between the ruling BJP and opposition Congress. Now, around 180,000 security personnel have been deployed to ensure peaceful polling, and VVPAT machines, those are being used with the EVMs for the first time in all polling booths. Now, Chief Minister Shivraj Singh Chauhan is eyeing the fourth straight term, while Congress is hoping to storm the BJP bastion Madhya Pradesh.
Also, voting for all the 40 constituencies in Mizoram is currently underway. The state has recorded a meek 29% voter turnout till 11 a.m. this morning, as per the Chief Election Commission. The voting process started at 7 a.m. and will continue till 4 p.m. Polling for the refugees will end at 3 p.m. Over 7 lakh voters will be deciding the fate of 209 candidates, 18 of whom are women, as the state goes to polls for the 8th time since it was declared a state in 1987. The state is the last bastion of the Congress in the northeast, where the party is eyeing a third consecutive term. The main rivals, the BJP and the Mizo National Front, are looking to make serious inroads into the 40-member assembly.
All right, fate in these elections is very, very intertwined with how the market also behaves going forward. All right, with that, it's a wrap from both Sonia, myself, and the entire team of Business Lunch.